Welcome back to another episode of Profitless on Purpose, the non-profit focused accounting podcast, one of the few. Anyway, I'm one of your hosts, AJ Wheeler, and with me this week, as always, is Tony Cajigas.
Hello, everybody.
And Mark Palardy.
Hey there.
Got a great show for you this week. We have an article on tools to grow your nonprofit. We also have another segment on building relationship with grant funders. Is it important? We think so. And then an interesting article on an artist that took $84,000 and returned 2 blank canvases titled "Take the Money and Run." We'll talk about the implications of that, how it affects, like how you think about how art is and what the accounting implications might be of that. And then our topic for the week is questionable board actions. We had a question come up about some questionable board actions. We got a lot to say on that, so we'll talk about that later. But to kick us off this week, Tony.
Hello, everybody. So the first article that we have today, the name of it is Tools to Grow Your Nonprofit Mission. It's by a nonprofit hub. It was very interesting in the fact that the article was quite short, but there were several links that you can click on and learn tons more information. So the first thing they talk about is taking an idea from concept to the 501(c) organization. They don't talk much about in the article itself, just to the fact that it could be overwhelming: tax status, donations, grants, bylaws, getting your board together, so on and so forth. But some of the links that they had was, the one link they had was to start a nonprofit course. It was actually a course that this nonprofit hub does. I believe you have to register for it. They also, which was very interesting, they also did a podcast. And the podcast for this section was what to consider before starting a nonprofit. And then the third thing they did regarding ideas was a blog that was titled, "What's the Risk of Starting a Nonprofit?" So you can click on any one of those three, get ideas on how to transition your idea to the actual nonprofit organization. The next step they talked about was the basics of organization development. And they talk about it could be very, it can present very unique challenges. And here again, they had a link to a blog entitled "What is a Vision Statement? Why Nonprofits Need Them." They also had a webinar for fundraising and marketing. And then they had 2 articles linked. One was creating a mission statement guide, and the other link was how to create a brand guide. Another thing they talked about was necessary operational matters. And they talk about, taking the time with your nonprofit to build the knowledge and the infrastructure needed, what type of board you're looking for, et cetera, et cetera. And here again, they had several links. They had a course on nonprofit accounting essentials, which I thought was interesting. They had another link, the ultimate budget guide. They had a blog, the accounting basics for every nonprofit team member should know. They had another blog, 3 common nonprofit board myths. Then they, towards the end of the article, it talked about how leading a nonprofit could be quite challenging. And here again, they had 3 blogs, actually. One blog was 5 limiting beliefs of nonprofits. Another blog was how can nonprofit leaders support boundaries? And the third blog was grow your confidence so you can grow your nonprofit's mission. So I'm going to hand it off to you, gentlemen. And what do you think?
Yeah, I take a little bit of issue with this article just because if I'm clicking on an article on how to start a nonprofit, I would hope that, and kudos, I guess, for them linking all of these kind of resources that are available. But it almost reads like, kind of like a brochure for what they're offering. And now I clicked through to see what some of those links were. I don't know if some of them cost or not, but I would think if you were kind of like researching this and came across this article, you would want a little more detail, I guess. Like I guess for me, if I was the one writing this article for the nonprofit hub or whatever it is, I would have tried to include maybe some excerpts and like some, highlights of what's related in those linked articles and kind of courses. Because to me, this just reads like a list of like, here's your homework assignment to go and research stuff. And I understand that a lot of this kind of goes in, more depth. One of the other things I didn't see addressed here was like it talks about going from concept to 501c3. 501c3s aren't the only nonprofit arm. It's just it's the largest portion of that 501 tax code. But I think what got me was there's no talk of like the nuts and bolts of how to get from concept. And then you start getting funding or traction before you even got your 501c3 designation or your acceptance letter by the IRS. So what do you do in the meantime? Often I've worked with other nonprofits that act as a bridge or a fiscal sponsor for a nonprofit, where they're actually collecting and managing your money for you for a nominal like administrative percentage, and housing and protecting those donations and grants that come in while you get started. So I guess from my standpoint, I would have liked to see the author maybe take some more time to extract meaningful content out of the links that they provided in the article, and give a little bit more guidance to somebody that's coming here. Because I imagine if you're landing on this article, you are like in the formation stages of putting this together. And, I guess there's other resources for somebody like this. There's a nonprofit Reddit that has a monthly thread about starting nonprofits that has much more detailed information than this does. That's user, generated. There's other like local nonprofit associations and such. Like in Oregon, I know we have the nonprofit association that kind of can help direct this stuff and provide resources to, starting a nonprofit or a brand new nonprofit. But I was just kind of disappointed with the list, kind of the way that just listed here, click here, and refer back to this article, and kind of how it was just an advertisement for their courses, essentially.
Yeah, I'm gonna agree with you in large part, Agent, but I think I'm gonna soften my stance a little bit on this. And I think I understand what they're trying to do here, right? Katie Appold, the author of this, is trying to get you to buy more of their nonprofit hub products. I agree with that. But at the same time, we've been doing this podcast for, a couple dozen episodes at least at this point. And, I think sometimes it's good to get back to basics, right? I know like later on this podcast, we're going to have a heady discussion about UBIT, right? If you're a nonprofit just starting out, you've never heard of this before, and it makes no difference to you because you're not at that stage where you're needing to worry about it. But for basics, this is an article that kind of does link you to other places based on what you need. I completely agree with AJ when he says it would be nice for them to have fleshed out some of the things before adding a link. Like, if you need to do this, X, Y, and Z, here's how you get started. For more information, visit this link. So, I mean, in a way, we're doing something not dissimilar because we're going to link this article below this podcast. So we're giving you a link to more links, right? So kind of the nature of hypertext language on the internet is just the endless rabbit hole. But if you are starting a podcast, it's at least good to think about some of these things like organization development, creating your mission and vision, starting up a 501c3, if that's what you're actually needing, right? And there are lots of other resources out there, but I think this is at least a primer to get you to start thinking about some of these things, because a lot of people, when starting nonprofits, they just think, I'm super passionate about this thing, let's just start a nonprofit. So it's good to at least have in a short article some of the aspects of that you're going to have to think about: the accounting pieces, the end of the year tax pieces, the hard work that's behind running a charity successfully, and what the IRS is going to expect. So, I agree in large part, but I think it's serviceable.
Yeah, I guess my big beef was they didn't link anything outside of their own kind of like, sphere of this nonprofit hub. And I'm always, like, dissemination of information for, especially in the nonprofit sphere. Granted, maybe they think their stuff is the best, but often I feel like, yeah, I guess, and instead of pumping their own wares, maybe they could have provided like links to like the IRS or like a FAQ page for, in simple English of what those requirements are to get started, and how to submit those forms, and how to choose what kind of 501 you need to be, because there are differences, So, yeah, I guess I agree with Mark. Probably I was a little harsh on the author, but at the same time, I guess it just annoys me when, you're kind of like the snake eating its own tail. You're just kind of feeding your own kind of courses and stuff. But Mark, do you have our next article for us?
I do. It's called Building Relationships with Grant Funders. It's also from Nonprofit Hub, a very popular source for nonprofit information, by the way, written by Caitlin Coughlin. And this article talks about the many different ways you can build long-lasting relationships with your grant funders. And I think, in essence, to boil it down, they're basically telling you that grant funders are people too, right? So you want to do your homework, figure out who they are as an organization, who the actual funders, the people making the decisions, or the decision team. Do some homework on them if you've never received money from them before. Try to find ways to connect outside just, the standard, this is my mission and this is what I'm doing. So figure out who your gatekeepers are, and treat them as a regular donor in your donor cycle, right? If you are a fundraiser, you're not just going to the well and then ignoring that grant funder for the rest of the year. You want to cultivate a relationship with them, ask questions, have them become a steward for your organization, and say thank you, right? This is one of the things the article brings up, which kind of boggles the mind. But oftentimes when nonprofits receive money from a grant, from a foundation in a grant, they might not even say thank you. They might just say, okay, work is done, checked off the list. The foundation is this big nameless, faceless thing. And, if you want to continue to receive money down the road, saying thank you and showing the grant funders what their donation has done for your organization proactively, without saying, I'm asking for more money, right? Because they are people and they want to be appreciated. And like we alluded to in the last article, if it looks like you're just going after them to just for the almighty buck, nobody wants to be treated that way. So what are your thoughts, guys?
Yeah, I thought it was, I really like the article because I think it drove home the point that we've made on this podcast time and time again, that, like any part of fundraising, whether that be individual donations, foundation grants, government grants, you name it, any source of funding for a nonprofit, I really feel strongly about being relationship driven. And, maybe some fundraising professionals might take issue with that, like maybe this is all more mechanical, if you're writing like a grant application or something like that. But in my experience in the organizations that I've worked for, that absolutely is true. So I think it was good to drive home that point that, like Mark said, this isn't some big faceless organization that just hands out money to, the best grant application. I think it really is a relationship. And when, if you're sitting on the other side and ready and, taking grant applications and approving grant applications, you're going to award those grant applications to not just the best grant application that comes in and kind of fills that need that you're granting money for, but you're going to grant it to somebody you feel like you can trust with that money. And trust is built upon a relationship. And, so I think absolutely you need to build those relationships. A lot of the nonprofits I've worked with, even the governmental grants they get, yeah, some of them may just be put in an application and a budget, but oftentimes it's from a government agency they've worked with before. They're aware of like kind of the mission, vision, the stewardship of the money that happens in the organization, and they're willing to fund more programs, I think this also holds true. The article doesn't talk about it, but it holds true as you're fulfilling the grant. if you are running into budget overruns or underspent, that conversation and relationship with grant funders is vital to be able to either get a no cost extension on your grant, rejigger the kind of the budget to, like shore up any shortcomings, especially with COVID. If you were doing in-person kind of presentations or education, that can no longer be done in person because of mask restrictions or mass gathering restrictions or whatever it is, that you needed to work with your grantor to make sure that if you held a virtual event or postpone those events till later, to be able to have sign off from the grantor on that, instead of just throwing up your hands and saying COVID wrecked our whole grant. So oftentimes with especially governmental agencies, they don't want the money back. They've budgeted to give this money away, and they're willing to work with you in a way to make that work, to make the grant and the outcomes of that grant work. So again, having a good relationship with your grantor and your funders is like job number one of fundraising, I think. And this article drives it home. Even if it is a grant from a foundation or a government entity, I think that rings true.
Yeah, I'm gonna maybe take a little different approach. This article is just like everyday life, and even for profit businesses. When you're trying to get new clients, and especially so for nonprofits, you need to do your homework. You need to get on a professional and sometimes a personal level with people that you are trying to bring into your business and or a grant funder. It's you don't want to treat this funder like an ATM. You want to keep them in the loop, follow up, especially when you're receiving your monies. You follow up, tell them how things are going, and of course, we were all taught growing up to say please and thank you. And that's very important, because people on the other end genuinely feel that you appreciate what they are doing for you. And it's very important. And especially for nonprofits, you have to keep your priorities and your passion and do your research, because a lot of nonprofits, they really rely on these grants. So that was my take, and I believe AJ, you have our next article.
I got kind of a concerning and funny article here, and if you've been paying attention to any kind of news, I think this probably came across everybody's news feed. There's countless articles on it. Mine came from NPR, and it's titled "For $84,000, an artist returned 2 blank canvases titled "Take the Money and Run." So what happened was they had, I think this is in Danish museum, hired an artist that had used currency in art exhibits before. And essentially they gave the artist the equivalent of $84,000. And when he returned the work of art that was to be displayed, it was 2 blank canvases, and the title of the exhibit was "Take the Money and Run." So it kind of, it's a weird situation, and it provoked a bunch of laughter and kind of questions relating to, is this, ethical? Did we actually get what we paid for? How you value art, and kind of this, like question around what's the recourse in this. So when I first read the tagline in the article and saw this come up on my newsfeed, I thought this would be a great discussion about like structuring your agreements for in your nonprofit to make sure that you're not getting screwed over. But in reading the article, the museum actually had a pretty decent like contract with this artist, but it gets murky as, essentially he's trying to make a public statement about being forced to work for under amount of money, and being having his art and your time and effort kind of valued. So he's kind of making like almost like a political statement or a statement on capitalism here around why he did it. But I thought like this is an interesting, I guess, idea around especially in like the museum and art world. But I was wondering, like, and the reason why I brought up the article was I was wondering if this could kind of bleed into any other kind of public service areas where you hire somebody and, you know, like they kind of perform what they believe is the correct thing to do, but it doesn't actually really match up with the vision of what you had hired somebody to do. I'm sure the museum didn't hire this guy to deliver 2 blank canvases for $84,000. But then the other side of this is this Danish museum has gotten quite the PR boost, and probably people feel really bad that, you know, this artist took $84,000 of public money to deliver 2 blank canvases, that I could see this as being a fundraising boom for this museum. So is the publicity outweigh the $84,000 that the artist took away? Or, you know, and I guess my question to you guys is there a parallel here with like anything outside of the museum and art scene that would kind of fall into the same kind of thing when you're contracting with somebody to do services for a nonprofit?
Yeah, this article on the face, so many ethical, legal questions. You know, they actually displayed the art. So is the museum benefiting from it? You know, I believe the gentleman said he was going to return the money. So the museum wants the money back. There was a contract. You know, what's like the monetary value of all this? When you're dealing with art, it's so difficult to determine what the value, because somebody will pay millions of dollars for a painting or a piece of art that you or I may think is worth $100. And that's just, you know, you see that all the time. I mean, when I first started reading the article, I thought to myself, boy, this is wrong, you know. But then as I dove down into the article, you know, well, like I said, that the museum displayed it, and, you know, it's what I would like to know is the outcome of it. You know, what happened to the money. And I know that the museum gave the gentleman an expense allowance. So it was interesting.
Yeah, I like this article a lot. And, you know, I'm sitting here thinking like this artist is probably sitting there somewhere in Denmark. He got a little high, starts listening to some Steve Miller band. Ooh, take the money and run, right? And he's like, oh, brilliant idea, right? So now he's going to make an art piece out of this. But I think Tony nailed it, right? The museum displayed these blank canvases, right? So all of a sudden, contractually, and I think this goes back to AJ's point, if you are the nonprofit, right, is this a making lemonade out of lemons kind of situation? Like, this is the art we got, that we have the space for it, so we have to now display this as part of us fulfilling our end of the contract. You know, what if the art that this guy delivered was something more offensive than a blank canvas? He's an artist. Is he allowed to portray this in any way he wants? But I think the nuance of this that is interesting, and I think we'll find out more come January, is that this exhibit is scheduled to go through January 15th. And the $84,000 is his payment. It wasn't what they paid him to do the art. He's getting paid some other sum from Denmark. This $84,000 was supposed to be money incorporated into the art, like as part of the art showcase. So the museum basically has this theory now, once the art comes down, are they going to get the capital back, which they agreed to loan him to display on the art? So once the blank canvases come down, does he return that capital that was on loan? That's where the interest is going to come in from an accounting point of view, like, or is he going to say, well, you know, I delivered way more than you, you know, the publicity that has come out of this, the numbers, you displaying this art, you know, I don't know how many people are driven by admission sales to go to this Danish museum to see 2 blank canvases, but takes all kinds, is all I gotta say.
And I've known a lot of artists in my time, and I don't know if I'd leave $84,000 with them over a few months and then expect to get it back in January, you know, so we'll see if he comes through. But I guess, and then it brings up the point, right? If his art was really take the money and run, does he die on that sword by not giving the money back, to make sure that his art was heard? And then what are the legal ramifications behind that? If the money, say he did an art exhibit about blood money, right? And he took all this money and put fake blood all over it, and the money is unusable after that point. Could he make the argument that, that piece of art is his and the money is incorporated in it? The same way the money that wasn't used in the art, take the money and run, is his artistic statement. So I think it brings up a lot of really I was going to say cool, but maybe not cool for the museum, but really some interesting and thought-provoking questions around how you value art, and when I mean value art, I mean value art on a balance sheet or on an income statement of what it cost, right? And how that's valued. So I don't know. I think there's a lot more questions here than we probably have time to answer, but I thought it was a really interesting article to dive in and think about. So, Tony, do you have our discussion topic for this week?
Yes, sir, I do. And I believe you gentlemen will have quite a bit to say with your experience. So the issue is questionable board of director actions. So this is from a gentleman who joined his first nonprofit. He's on the board of directors. And one of the things that he said was bothering him was that one of the finance chair owns an accounting firm that provides accounting services, and they are charging $2,000 a year. And he says that it's probably under an hour of work a month providing P&L and tax returns. So, and another thing that he has issue with is that the books for the last couple of years have been held very close by the chair and the finance chair. So he also says that it's a very small board, and due to the toxic mindsets of these two gentlemen, there's very high turnover. So what his question is, he says, I'm not sure if what they're doing is legal. He says, I know it's not ethical and screams conflict of interest. And he's not entirely sure how to approach it. So, gentlemen, what do you think?
Boy, this question delves into a kind of a lot of I wouldn't call them gray areas, but definitely some discussion points here. And I think there's a few questions embedded in this one question. Let's tackle, first of all, whether or not it's legal, quote unquote, legal for this board member to provide accounting services. So I believe in the question, the gentleman says he charges $2,000 a year. And what it does is it provides a P&L and 990 return to be provided. And then I believe, so, couple hours a month that I'm assuming from the question that this accountant goes in and reviews kind of the month-end close items, puts together a board report, and then files a 990 and charges the nonprofit, and the quote is charging almost $2,000 a year. So let's talk about that first. If this was an auditor, if this was the auditor of the nonprofit, I would say this is completely a breach of independence. But if it's just preparing a tax return and doing some, oversight, I don't think this is a breach of, it may be a conflict of interest, but it's not illegal, I guess is what I'm saying. So I would say that they need to have a conflict of interest kind of document that is enabled in the board so that everything is above board or everything's laid out on the table, that it's known. And I would say from this standpoint, they should probably have a vote every year on whether or not to continue using this accounting firm to do the preparation of the 990 and perform monthly accounting services. And then the board member, that is the accountant, should accuse himself of that vote due to a conflict of interest. So I think that's the first question. And I think to go back, $2,000 a year to file, at least in the Portland metro area where we're from, $2,000 a year to file the 990 and perform an hour's worth of, essentially 12 hours worth of accounting work a year does not seem unreasonable to me. That seems pretty fair. I used to work at a public accounting firm, And that 2,000 a year is about market value for a 990 preparation for a small nonprofit, a basic small nonprofit. So I would say that, the monetary charge that he's charging the nonprofit is not exuberant. He's not price gouging here, I don't believe. But you guys can correct me if you think maybe differently. The other part of this is this really holding it close to the vest. This is where I diverge from maybe having some exceptions with the way this accountant is holding this. Now, I can understand this is only one person's side of the coin here, and his or her view of how this is happening. And it may be the fact that they're presenting, pared down financials for the ease of reviewing what the results of operations during a month. But if somebody is inquisitive, or if somebody is on the finance committee and wants to see the whole enchilada, so to say, then they should have access to those books and records to be able to peruse them to make sure that everything is on the up and up, especially if somebody has a conflict of interest like this, where they're performing accounting services and they're part of the board. So I would say that from, an accessibility or accountability kind of situation, if you're in a situation like this where somebody is holding close to the vest and you're not allowed to look at books and records, I would say that's maybe not a red flag, but an orange flag, or getting your way to a red flag, that you need to have a discussion about looking at the underlying books and records if you're concerned, and have somebody walk you through how they're rolling those up into a basic board presentation. So those are kind of, I think, the two sides of the coin that I see here. And kind of my advice on how to overcome that. But I'd like to hear what you had to say, Mark.
Yeah, I think I'm going to echo a lot of what you say. When the $2,000 price tag came to my attention, it's like, that seems reasonable. But I think in large part, what I want to know is, how large is this nonprofit, right? Is it a small nonprofit that's getting under 50,000 in revenue, and they're only filing a 990N postcard every year? Because that doesn't take any time whatsoever, right? Or even the 990EZ, right? They might be in that category, which does take a little bit of time, but isn't super complex, or to the level of complexity that a 990 would be. So that would be my first question. I think the conflict of interest policy definitely needs to be in place. And one of the things that a proactive solution perhaps to this gentleman who is concerned would be, rather than confronting, trying to institute a bidding system at the nonprofit, right? And say, well, let's bid out anything that we're paying over whatever, $1,000. And then as the nature of the course, this accounting services gets bid out every year or every couple of years as well. And if people are, if it's a small enough nonprofit where this takes no time whatsoever, a bookkeeper or some other accounting firm may be able to take this on at a cheaper price, and then problem solved, because you're doing what's best for the nonprofit and you're following a bidding procedure. I think, the conflict of interest with keeping it close to the vest, that does send up red flags for me. But again, it's hard to know from the author of this question if they just don't necessarily know accounting procedures, or if this is really some shenanigans, for better word, going on, right? If there's some sort of, right, because we have our fraud triangle of, custody, recording, authorization, right? If you have somebody who's got the authorization and they're doing the recording, there's more likelihood that something nefarious could happen in the background. Doesn't mean that it does, but if we have two people on the board who are potentially colluding and hiding money either coming in or going out, and not letting anybody else review the books, that's a problem, right? However you slice it, regardless of the size. But if, like AJ suggested, they're just paring down financials so that it's easier for people to read, but really there are checks and balances against fraud, then I think the author might just need to be educated on what's in place, because frankly, my number one rule of being on a board or looking at boards is transparency. You should be able to look at books. If requested, you should be able to discuss why you've made certain decisions, and you shouldn't just hold yourself up to be, well, I'm the accountant and I know better, so I'm not going to bother explaining this to you. So that's my take.
And I also might mention the benefit of, I've been on boards where you have like a really, like the finance chair or the accountant at the nonprofit is wants to be completely transparent. And so what you end up with is, like the entire full-blown P&L by class with every GL account that's ever existed in it. You've got the balance sheet with, 100 lines of rolled up prepaids and, all this other stuff. And what it really does is it derails that board conversation regarding the finances of the organization, because often it's much like, there's analogous to a for-profit where if you give them too much information, we're going to spend our time on $100 miscellaneous charge, right? Like, where did this come from? What is it? Why is it there? Whereas if you're providing, large swaths and kind of large grouped up kind of, like, you don't need every single bank account, cash and cash equivalents is probably really easy to see to make and the real necessity of providing the overall board with a financial report is for them to know the financial health of the organization and for them to be able to make decisions based on where they are at in the budget cycle and where they're at in a cash position and what the balance sheet is, the statement of financial position, if we're being fancy, is in relation to the rest of the organization and where it's headed, and for them to be able to ask informed questions and make informed decisions. So I don't, there's being transparent, and then there's being overly burdened with unnecessary information in a board setting,
AJ, it reminds me of those legal procedures that you see it in every legal show where it's like they do the data dump, right? It's like, I need some information, and then they bring in these reams of bankers boxes like, here it all is, figure it out. So
sure. Yeah. And I think, I think that what I've seen is from a financial standpoint, a good treasurer and a good accountant at an organization will be able not only to present the information, but be able to convey, like a budget to actual variance that's there. Why is it there? What is the future outcome? Do we need to adjust our thinking about why we're off of our target? Or is there a legitimate reason why we're not at that budget point that we expected to be at? Or to be able to explain what makes up prepaid, what's in prepaids, what are we prepaying for? Is there a necessity for it? So being able to explain this to the board in plain English so that they can understand it, because again, you're talking about a volunteer board that probably 90% of them, don't have any kind of financial understanding of how nonprofits work. So being able to disseminate this information correctly, I think, is really important, and being transparent when needed, if asked, I think is like, you have to balance those two with providing enough information to make decisions, but then also not giving too much information where you derail it on, the specifics behind $100 transaction or something like that, or being overwhelmed with information that you can't make a decision because you can't make heads or tails out of what you're looking at, So, or like Mark said, right, you give them the data dump and here, you figure it out. That's not a good position to be in if you're not somebody that has financial knowledge or how accounting works,
Yeah. Good conversation today, gentlemen. I appreciate everybody participating, and I appreciate everybody out there listening. We always encourage your participation either by putting a comment down below on the YouTube channel, commenting to us on Twitter at Profitless Pod. We welcome the feedback and we welcome your questions. If you want something answered, please reach out to us on Twitter and let us know if you have a burning accounting question that you want the three of us to handle in a future episode. Again, on behalf of AJ, Tony, and myself, thanks for listening, and we'll catch you next time on the podcast.
Thanks, everybody.